Hi, Jonathan.
Hi.
Thank you for joining the Wall Talk podcast.
Thanks for having me.
Excited for you to be here.
I'm very excited to speak.
I'm curious about your path to Pantera, like from college to post-college, and then your first entry point into your career.
So I got into crypto in late 2016, early 2017. I was at UC Irvine in Orange County.
Oh, I saw you had like Irvine Crypto Club or
Yeah,
something.
yeah. So I started that
Yes,
along with a couple of good friends. So I remember I was in the dorm, and back then I was looking to get more involved into investing, and initially in stocks, but I think I saw an ad for Coinbase, and it was like, buy Litecoin or buy Bitcoin.
Oh gosh.
Back then it
What
was
a time.
Yeah, there was only like 7 or 8 maybe coins on Coinbase back then in 2016. And so the first coin I ever bought was Litecoin. And then I bought Bitcoin shortly after, and then Ethereum was my third coin. And then things started going up. There was a bull run in 2017. One of my dorm mates at the time, he also got into crypto around the same time. And we said, hey, we don't have a blockchain club or a crypto club at UCI. Why don't we start one? I think we saw, maybe Stanford had one, Berkeley had one at the time, but not a lot of other universities had one. So we said, this is kind of an opportunity. So we started a club. We decided on weekly meetings, we're going to invite the student body, advertise, see if we can get people out to learn about crypto and learn about blockchain. It was a disaster in the beginning. We had like 3 or 4 people coming to every meeting, and it was like the same people every
I feel
week.
like that's a lot for 2016,
yeah,
2017,
it
honestly.
was, but it was only because we were buying pizza at every meeting, and it was like a free meal to come out, right?
Smart.
So we had the same people at every meetings. We would prepare slides on, what the market's doing, what different ICOs were coming out, what different technologies we're building on, Ethereum, what we thought of the future, different things that we thought were interesting, basically. And we did that consistently, every week through 2017. And that bull run that eventually took off really correlated to club attendance, right? So by the end of 2017,
they're like, we should have been here.
Exactly. We had to rent out lecture halls instead of being in individual classrooms. We sometimes had over 100 people at meetings, and we were looking around at, the people that were sitting up there, and there was adults that were not students at UCI that they just heard they were in the Orange County area and were coming to the meetings every week. And so we're still catering every meetings. I think a couple meetings we did Ethereum giveaways as well, where, we handed out tickets and gave away our personal Ethereum, which looking back was pretty significant, because back then, Ethereum was maybe a couple $100, right? Maybe even less than that. So looking back, that was fun, but stayed very involved in crypto, graduated in 2018. And for those who were around in 2018, it was probably the deepest bear market, that we've had since at least I got into crypto.
That's when I started as well. September 2018.
Yeah. And there was not a lot of crypto companies hiring at the time. So I said, okay, I'll go sort of get a safe job at a startup that I interned at in Irvine, but continue being active in crypto on the side, continue trading, investing, looking at angel opportunities. And then DeFi summer came. My activity in crypto really sort of took off around then. I decided, if I want to get institutional exposure to crypto and learn how a large, venture organization works, then I should try to position my career over there. So I was looking at a few different companies. I'd tracked Pantera for a long time. I'd read Paul's pieces, Dan's pieces for quite a while. Got connected to Franklin, who's a general partner at Pantera. Back then, he was head of portfolio development, so he was head of platform, and there was really no one on platform back then. So I was kind of the first person to join the team on the platform side. And, Franklin came to me, he said, I love how active you've been in crypto. I love how active you've been in DeFi. I like that you came from a startup background. You've worn many hats. That's exactly what I'm looking for here, because we don't have any of the pieces built out, but I want to build them out. And here's my vision. He's like, right now in crypto, and I suspect this will remain the same moving forward, capital is rather cheap. If you're a good founder and you have a good product, you really don't, or you didn't have any trouble raising your round. So then it became a battle between VCs on who can get their allocation on the cap table. And because of that, it was, how can we prove value beyond just cash or money? And that's where the platform idea really came from. And there are a few other people at the time that were doing it well, A16Z, and a few others in the Web 2 sphere, but no one really in crypto had invested a ton of money and time into building out their platform team. So I joined, and here I am 5 years later.
Oh my gosh.
And we have a few different pillars built out on the platform side. So I run growth, which is business development, go to market, events, general strategy. We have Ping, who runs our marketing. So she works on everything external marketing related with portfolio companies. We have a 2-person research team that does deep dives, technical dashboards, some tokenomics work with portfolio companies, and then Nick, who is our head of talent, and he works directly on talent related initiatives. And so combined, we're like the
Avengers. Yeah. Yeah. What are the publications that you're reading?
I think what people have seen in media is that the future media is aggregated, right? And it's synthesized through AI. So people aren't going to the traditional media outlets. They're not reading the news articles, right? They're getting it through some sort of summary tool that either they've built themselves or they use from the market. And
like Telegram.
Yeah, exactly. And that's like how people are synthesizing information now. It's like a lot more efficient to read a summary that is maybe tailored to the exact things that you are interested in, rather than having to parse through an entire page of text, right? Just to get to maybe 1 or 2 sentences that matter to you. And so that's what, I see we're doing today. At Pantera, I built a tool that takes a lot of different RSS feeds, and then it parses out portfolio names. So if there's any portfolio related news, it'll source those to us through a Slack channel. And so we get flagged on that immediately. And it also shoots us a snapshot of what's happening today in crypto. And that sends every day at 10 a.m. to our entire team. And so that's how we get a lot of information. And all those feeds are available for free, right? Which is why we've also seen sort of this decline in media-based API pools, right? So there are a few different companies in crypto that were providing data through APIs, through paid APIs, but a lot of that can just be gotten for free now. And so those businesses are not as moaty, I guess, as they were in the past. And so people, it all comes back to how people consume information now. It's much different than it was even 6 months ago.
So in terms of building this tool, how long did it take you? What did you use? Claude? What did you use?
Of course, everyone vibe codes with Claude nowadays. It's it was one of those things that I thought of last summer. I had an intern sort of help on it, but after they left, I sort of took over the project, and it all came down to the fact that Pantera is a pretty large team. We have 75, 80 people. Not all of them are crypto native, because not all of them have to be, right? But they're all crypto curious in some way. And so they want to know what's going on in the market. They want it to be digestible and sort of broken down into a summary basis. And they also want to...
Sorry, I was just going to say they want it to be the most high signal information.
Exactly. Yeah, and they want it to be relatable to the things that we're investing in. So they want to know what portfolio companies are in the news, what they're doing, and they want that to be repeatable, right? Like every day, people love sticking to a schedule, right? So having it send every day at the same time was a huge unlock for our team, and people count on that now as their daily source of information.
How else are you exploring with AI tools, or what else have you built out, even from a personal standpoint or professionally? What has been the biggest unlock for you for AI?
Yeah, AI really has fundamentally changed the way businesses operate, and specifically within a venture firm. I think a lot of venture firms have the same problem of siloed data, right? You have different disparate databases, you have different CRMs that you use, maybe different teams use different CRMs, and how you manage portfolio company interactions, which is very specific to what I do, has huge implications for AI providing, huge improvements over what I previously did before. So I use AI to synthesize all of our different databases that we use, CRM, Airtable, different Google Sheets, our trading team, and put all that information into a centralized dashboard, right? Where you can search a portfolio company and immediately it pulls up, what that portfolio company does, the summaries, everything we've done for them in the past, introductions, notes from catch-up calls, our positions, our rounds that we've participated in, who led those rounds, what our ownership percentage is, and it's all in one centralized snapshot, which we didn't have before. And so that was a huge unlock to productivity, because now instead of going to 7 or 8 different independent databases, just go to one centralized database and learn everything I need to about a company. And we have 265 portfolio companies now. So as you can imagine, it gets pretty hectic as you try to parse through all of those.
How much did you have to train your Claude to understand your voice, the positioning of Pantera, all the things that were super important on the input side? Did that take a while, or was it pretty seamless?
I think it's pretty seamless. I mean, it now, especially, it learns alongside because they've implemented a ton of new memory tools that are really great. And so it didn't take a long time for it to learn our voice and learn our output, little tweaks here and there. But really, it's a great tool that I use every day. And I think everyone across the investment and platform team, they use it pretty much every day.
I love that. Quick question. So in terms of projects that are maybe reaching out to you guys, can you tell, because I've heard this from another fund, could you tell if they're using AI to submit information or correspond with you guys? Does it feel sometimes like AI slop from some of these potential companies that are looking for funding?
I think so. I think, we've been at the game for 13 years, right? So we have a really good read on founders, and we have a really good read on first impressions, right? And so if someone sends us a deck, if the deck is made with AI, we don't really care that much, right? Like that, AI is a tool, like I said, to maximize output, and the founder's time is better spent creating the project than building like a really pretty deck. So that's okay. But if the premise and everything within the project is built with AI, it does set off, a few red flags, just because we have to be a little bit more careful with, vibe coded stuff, especially when it comes to smart contracts.
Yes. Oh my gosh. Yes. Yeah.
Exploits, which could partly be due to AI as well. So yeah, we are sensitive to it, but it's not a blocker. If the founder's good, the product's good, and they're just using it to enhance their work.
Are there some projects that have maybe been vibe coded, but they are actually legitimately interesting, and you guys are like, okay, like maybe this is just like at the conceptual phase, it's worth exploring or potentially investing in?
Absolutely.
Okay.
Yeah. I mean, AI, what it's really good for is getting from 0 to 1, from idea to conception to actual MVP, right? That process has been sped up many multiples since pre AI and now post AI. So getting to that first MVP and something that we can actually test and look at and use as a real product has been a huge unlock as well for the venture capital side, right? So before you used to have to think, this is a theoretical idea. This is something that could potentially be built, but it's not created yet, especially on the really early side. Now, founders are showing us what they've actually built, and it's working. And so that's been a huge shift over the last few years.
Acquiring customers already, but then there's security aspect of everything. Like they still have to implement security protocols when you vibe coded something.
It's different for every type of project, right? I mean, security, we like to see that as a thought throughout the entire product, not as something that you think of like at a Series A or beyond, right? Especially for, like I said, anything involving crypto or DeFi or finance, like you have to be very, very safe on that end. But what AI has also done is it's changed the landscape of team compositions, right? Now you can have a 1 or 2 person team that gets you almost all the way to like a Series A in some cases, right? Which is crazy. You used to have to start hiring right after your pre-seed and your seed. You're still hiring, growing the team. Now with AI, you can do a lot more with a much more condensed team. And so we're seeing, much smaller initial teams that are moving at a much higher velocity than teams many times their size, because they don't have the bloat, they don't have the overhead, they don't have the processes that have been baked into the DNA of the company, and they can move a lot faster with AI.
Have you seen a shift in the type of founders that are building with AI? Like, are they more like they're less technical potentially, and they're more visionaries, but they have an idea they want to execute, and they can see it to completion, but they maybe just didn't have a technical background. Have you guys seen that shift?
Yeah, so I'll take my Pantera hat off.
Okay, yeah.
A lot of thoughts here. What we've seen, at least, in my conversations, I have a lot of computer science engineering friends that, work as developers at a lot of the large companies. At least to me, when I was having initial conversations with them when AI first came out, they were actually the most resistant to adopting AI.
Right? I'm sure.
This doesn't work. This doesn't improve my workflows. I'm never going to touch this. It's going to be so long before, this comes in and makes a meaningful change in my job. The ones that were quickest to adopt it were the marketing people, the business people, the sales people, the non-technical roles that now had a tool that really allowed them to almost supercharge their workflow, right? They were almost given a superpower overnight, where they have had a ton of ideas and a ton of,
This was me.
oh, I could improve this as if only I knew how to build this tool or whatever. And now suddenly they can build the tool and improve so many areas of their life and their job and their work. And so they really had, in my opinion, in my experience, the highest levels of adoption from very early on. Whereas engineers might have been a little bit more resistant. Now they're catching up.
Were there so from the investing perspective, like were there founders that you felt like if only they were a bit more technical or had certain tools, like they would be, worth exploring from an investment standpoint, and you guys maybe had to pass on them, and then now maybe they've built out certain tools using AI, and now you can reconsider them as a potential investing opportunity?
Yeah, I mean, a lot of the things that we pass on, we track, for future rounds. A lot of time it's just a timing mismatch, right? Like the round size is a little bit too small for us. It's a little bit too early. We want to see more traction. Very rarely do we just write a company off completely and sort of throw that application in the trash. We have a pretty extensive database of founders that we've talked to over the years, and maybe your first idea isn't the right one. It's not a good fit for us. That shuts down. You start something new, and we want to chat then. So we've definitely seen an evolution in founders where they've come to us, it wasn't a good fit, they go back to the drawing board, they have new tools, they have new AI, and they come back and it's a lot more compelling. But the investing landscape has changed, I think, as well. When you have the ability to have a two-man team go from idea to MVP to functioning product to getting revenue and getting customers, a lot of times they can skip right over that pre-seed round. They can skip over the early seed rounds, and because they're generating revenue, right? I'm not saying that happens a ton now. Essentially, when you get to a Series A, there are different criteria that investors look for, right? Like at a Series A, you're looking for either having revenue or a very, very serious path to revenue. Usually nowadays, they all have revenue. And you're really looking to scale, right? You need that money to expand your team, to explore new geographies, to grow the engineering team, to really level up on the next projects, right? The products that you're building. The pre-seed and seed are really more of the exploratory phases where you're trying to find product market fit. You don't necessarily have customers yet. You're building the product, you're exploring, and you're building. So that's why I say AI has the ability for certain founders to skip over that initial exploratory phase and go straight to acquiring customers, acquiring revenue. And then I suppose, you could still call it a very large seed later on. You can call your rounds whatever you want, but they have the ability to be much more sophisticated in their raise, down the line.
What advice would you give to founders that are looking to fundraise and they don't really have a concrete roadmap, but they want to position themselves as strongly as possible for potential investors? Like, what advice would you give them?
Yeah, I mean, I think it depends on what stage you're at, right? If you just have an idea and you're either vibe coding it, you're building it yourself, there's sort of a lot you can do to position yourself well to an investor, right? At that earliest of stages, the pre-seed and seed, we're looking for the founder bet, really. Your idea doesn't matter so much as you do, right? So the founder profile, why are you the best person to attack this problem? Why are you the best person to have the grit and the high agency to be the best entrepreneur that you can be? Because we understand at that early level, pivots are very real and they happen all the time. So don't get married too much to, I have to go to VCs with the best possible idea that's completely fleshed out and thought out. You should be going to VCs with, how can I pitch myself as the best person to solve different problems in this related field that you're trying to tackle.
That's great advice. And when you guys are doing due diligence on that side of things, like what are you guys exploring? And if you are looking at what a founder has done externally, like what really jumps out at you guys and what matters most when you're doing that type of due diligence?
Yeah, I mean, a lot of our founders are first-time founders. I think if they've been a second or third time founder, that makes things a lot easier. They have the reference checks, they have projects that they can point to. But we've backed a couple of really young founders, some as young as 19 and 20 years old. It's their first company. They haven't really worked at a startup before. Maybe they dropped out of college, and in that case, we're really looking for individual personality, how well that they can mash with our team and take direction, but also take ownership, of the project. And when they're really early on like that, really young, 19, 20, it's very hard to parse, what they're going to be like in 5, 10, 15 years. And that's part of VC, right? It's identifying individuals that we think are going to be winners on the long term, and making a strategic bet into their future, essentially.
And winner just from the perspective of who they are as a person and what they will achieve, just given like their character and their passion. And
and there are a number of tangibles too. Like, we look at, what school they came from. Someone comes from MIT, right?
Yeah.
And they drop out of like the PhD program at MIT. That's obviously going to be a higher signal than someone that came from X school, right? I won't even name a school, but like something less than the PhD program at MIT, right? So while it matters less nowadays with AI, especially because AI has, like I said, given regular people superpowers essentially to build products and extend themselves way further than they would have had the ability to do so in the past. When you're looking at the really early stage of founders, you have a limited data set that you can pull from, right? And unfortunately, schooling is still one of those data sets you can pull from. If you look at a 19-year-old and you're determining whether to give them millions of dollars, what else can you really look at? Maybe they've had some extracurricular activities in the past. Maybe they were a physics Olympiad winner, and maybe they came from a good school. And so you have limited levers that you can sort of play with when making a determination to invest at the early level. So yeah, in some cases it does matter. That's a long way of saying, it still matters.
What are some of the initiatives that you built out on the platform side that have been most impactful for the founders?
Yeah, so one idea that I actually got from another fund was, how can we quantify our impact to portfolio company founders, right? Like, we knew that we did a lot of things, but we didn't track anything. And that was a real issue for a lot of reasons. But essentially what we wanted to do was communicate back to our founders that we actually move the needle in a meaningful way. So I built an entire CRM tracking system that logged all of our activities with portfolio companies. So whenever we hopped on a catch-up call with them, if we met them in person, if we hosted them at a dinner or one of our events, if we made introductions for them, if we did a special project for them, if we helped them with liquidity or trading, whatever it may be, we wanted to track all those interactions. And over time, that has given us a huge data set of where we should allocate more resources to. And so, for example, last year, our number one ask from the portfolio was, I need token launch help. I need help connecting with exchanges, with market makers. And so because of that, I was able to put resources towards building like an 81-page token launch guide for our portfolio that goes over every step of launching a token, things that they should look out for, a timeline that goes back 1 year from TGE, and that really helped our founders. And then also every 3 to 6 months, we send a note to our founders that basically summarizes everything that we've done for them over the last 3 to 6 months. And that's been really well received too. We call it our proof of work report,
Nice.
which is a play on crypto. But
that.
Basically we're proving, we've done X number of introductions for you. We've completed these requests from you. We've hosted you at these events. And this is a quick summary of what your snapshot of Pantera value add has looked like.
You guys are so hands-on.
We try to be.
I love it.
Yeah, we built out the team, and that's my job, which I love doing. I get to work with some of the smartest founders in the space every day, much smarter than me, working on projects and problems that I couldn't hope to understand, but I try my best. And over time, it's been very rewarding seeing companies, sometimes either struggling or going through a pivot, working very closely with us, and then coming out on the other side. So, it's a very rewarding job, I would say.
You never seem stressed. You're doing a lot. You never seem stressed. You're always just like...
maybe I hide it well. It's stressful. We have a lot of portfolio companies. We're currently fundraising for a new fund as well.
Oh, amazing.
Once we close that, we will probably add between 60 to 70, maybe up to 80 new portfolio companies, which will bring us over that 300 mark. And so, we might need to find a way to split up the portfolio or segment it in different ways to be more productive.
Verticals are you? Sorry, but what verticals are you guys paying attention to when you guys are going to invest in those next? You said 80.
Yeah. I mean, it's if you ask sort of any venture investor in the space right now, they're going to give similar themes because that's sort of the consensus bet right now, right? Stablecoins, payments, tokenization, agentic commerce, right? Like those are an AI and blockchain. Those are what everyone's looking at, some prediction market stuff too. And so we're very much, playing along those lines as well. I think there's a lot of innovation that will happen with stablecoins and tokenization. There's a lot of countries that haven't created regulatory frameworks to manage these new technologies yet. And to us, that's a huge opportunity. Last month I spent 2 weeks in Korea, and we were meeting with some of the top banks, the top 5 banks, the top 4 asset managers, life insurance companies, gaming companies, family offices. And Korea is actually really interesting from a regulatory perspective, where more has changed in the last 8 months than the last 8 years combined, which is crazy.
Why has that happened? What's the shift?
There's been a government change. The old, I believe he's the hashed research president, is now chief of policy for the government. They've turned to becoming a lot more crypto friendly. A lot of the institutions and the banks have been asking for stablecoin regulation. They've been asking for security token offering regulation, which is their STO policy. They've been asking for tokenization, and right now it's sort of all coming to fruition, and it's like they're all stepping up to the plate at the same time. And before, corporations weren't allowed to invest into digital assets. Now that's sort of opening up, where they can invest, I think, up to 5% of their balance sheet into digital assets, and that includes fund investment. So
is that specifically in Korea, or is that other regions?
It's in Korea.
Okay, okay, because there's other regions in Asia that have been much more open.
Yeah. Hong Kong, Singapore come to mind.
Yeah.
I mean, outside of the U.S., Singapore is our most populous home for founders, and Pantera has been very globally aligned from day one. About 40% of our capital goes overseas outside of the U.S., which is, I would say, pretty rare for a venture firm that operates within the U.S. Usually, there's a lot more concentration, but crypto is global. And one of our theses from very early on was investing into the picks and shovels around the world. So we've invested into some of the largest exchanges in the different geographies, because we said, if we want to touch a piece of crypto that goes on in each of these countries, the main choke point is going to be on and off ramps and exchanges. So you can think Bitso, which is the largest exchange in Mexico and Latin America, and then Valor in South Africa, and Pintu in Indonesia, and numerous other ones, CoinDCX in India. And those have been really successful investments for us.
I didn't realize that. Anything in the UAE?
Yeah, so we actually invested into a large exchange in the UAE that got acquired by CoinDCX.
Okay.
And yeah, and so that was synergistic. One of our portfolio companies acquired another portfolio company, but yeah, we've been active over there too.
I want to pivot and talk about events as well, because you guys host a lot of really great events, some smaller, some larger scale. What's the strategy around hosting events, and what has been the biggest ROI on the event side for you guys?
So our event strategy has definitely changed over time, and I think a lot of people's has. Maybe in the past 4 years ago when I first joined, we were sort of prioritizing exposure. So we would get maybe 3 to 4 portfolio companies, and we'd throw a pretty large event. I remember we threw an event at Consensus Austin when I first joined. It was 500 people came.
It was like a mini Coachella.
Yeah, it was. We had vendors, we had food trucks, we had a private whiskey bar, we had fire dancers, and so it was crazy. And it was a lot of fun. But I think what we realized over time, and following feedback from our portfolio founders as well, the most ROI came from the really targeted private dinners, the happy hours that were capped at 30 or 40 people, where you can actually have meaningful conversations. And so we sort of shifted a few years ago to that being our primary strategy, rather than doing the very large events, which are a lot of fun, but plenty of companies do those now anyway. So if we wanted, we could piggyback onto those. But really, the Pantera branded ones are going to be strategically aligned with either our partners or our portfolio companies, and they're going to be much smaller in nature.
I feel like, to your point, it has shifted a lot to having more high signal curated events and conversations, so that you can build those relationships, build that trust, and that happens in those smaller environments. So I think that's a smart strategy.
And you can see that when people go around to different conferences now, it's what private dinner am I getting into tonight, right? It's no longer what massive happy hour am I going to, or let's meet at this happy hour.
If the Luma link says private, you're like, oh, I'm in a good one.
Yep, exactly. And so everyone's trying to book out the best restaurants. And that's really where the conversation, that's where the alpha is. And you get much higher ROI. Those events are also cheaper. You can rent out a very nice restaurant for maybe $5,000 or $6,000, right? Whereas a happy hour might be 15 to 20, and you get much higher signal from having 15 people in a private room around dinner than you would by having 100 people at a happy hour.
So I'm curious, why do you think founders choose Pantera over other funds?
I think, one of the major themes that Pantera has always been really good at is, using our network to our advantage. So a brief history on Pantera. We actually started in 2003. So Dan Moorhead was CFO, ex-global head of macro trading at Tiger Global Management, right? And so afterwards, he started Pantera as a global macro hedge fund. So in a way, Pantera is like a tiger cub of Tiger Global Management. He ran that for 10 years, and in 2013 is when he made his famous asymmetric bet into Bitcoin, right? And we transitioned Pantera to be the venture capital fund and hedge fund that you see today. They brought Paul on in 2014 to really run the venture side, and since then we've expanded to early stage tokens, liquid hedge fund component, et cetera. But our roots are really very much Wall Street Web 2 with Dan Moorhead and others on our team, but we also blend the crypto native expertise very well. And because of that, there's pretty much no one in the space, Web 2 or Web 3, that we don't have a direct line to, right? And so our founders lean on us a ton for our network, for introductions, whether that's for partnerships, whether that's for potential customers, clients, if they're raising another round, to other investors. And we're really the first, I would say, email that goes out or Telegram message that goes out when people are trying to make connections. And a lot of that is routed through me. So I see a ton of that. That consistently ranks very high, on our list of why founders choose us over others. We have a ton of surface area in the space, and just given the length of time that we've been at it, it's a huge advantage for founders to lean on us for warm introductions. Aside from that, we've built out the platform team very extensively. So Nick does a great job at hiring. Ping is an expert at marketing. And we made the Avengers comment earlier, but it really is true. When we do reverse pitches for the platform side to founders that are deciding between us and another fund, the platform team moves the needle in a meaningful way. So, introductions, network, talent, marketing, a lot of people like the brand name as well of Pantera, and that helps us really grow on the founder side.
It's kind of interesting. You were saying that the Wall Street track record is the edge in a way, which is kind of funny because it seems ironic in terms of like crypto, but totally. At the end of the day, it does matter. It does move the needle. So
it does matter. And I've always been skeptical about the crypto versus Wall Street, like this eternal battle that they're locked in. I think what we're seeing now with institutions coming in, and probably the original cypherpunks and stuff will disagree with this take, but what we're seeing is crypto technology, blockchain technology being used to improve the traditional financial system and traditional financial rails. And we're really seeing that vision and thesis play out in a big way. What that means is, crypto and blockchain and Wall Street and Web 2 have to work together. And whether that means faster settlement times, 24/7 access to different assets and different markets, we eventually think everything will be tokenized and blockchain rails will run, the existing financial system in a more optimized way. And that's really what, we're looking at. And when companies come to us and they want to connect with institutions or Wall Streets or banks, we have those connections, right? And so that's where it really sort of comes into play. And a lot of our companies are engaging with those institutions. And so we can be very helpful. Especially now. Like now more than ever, I'm assuming. This is just a question I have for you personally. Where do you think crypto or blockchain has the most utility, just from your own perspective? I've always say that, crypto's best sort of invention, right, is stable coins, right? It's this digital dollar that is accessible to anyone else in the world. And, people who are from other countries, they get it immediately, or they have family in other countries where remittances are sent back and forth, and everyone wants access to the US dollar, but they maybe can't get it in their country, or they have hyperinflation. And having a tool that people can use to hold US dollars and transact globally 24/7 instant settlement is an insane sort of technology that 20, 30 years ago people probably weren't thinking about. And so I think that is probably the best tangible use case for crypto is stablecoins and payments globally. And a close second to that, which, sort of ties into it is tokenization, right? People want access to different stock markets around the world. They want access to the US stock market, but now a lot of people want access to the Korean stock market, right? And tokenizing these different public equities on chain allows a lot more participation in the stock market, in markets in general. And it just creates a much more efficient global price discovery engine. You know, people can trade on the weekends, people can trade off hours, they can react to news in real time. Right now in the traditional stock market, if news comes out, you know, Friday at 7 p.m., the market doesn't react till Monday, right? Yeah. That's inefficient. That gap is an inefficiency in the market. And so, you know, 24/7 access to those sort of tokenized equities is huge as well. And I think we're going to see anything that's worth trading be tokenized in the future. So I'm excited for that.
Thank you for joining. This was such an awesome conversation.
It was great.
Where can people keep up with you and find you online?
They can find me on Twitter at Jonathan Gieg. LinkedIn, I'm much less active on. So Twitter, Telegram, Jonathan_Pantera. Those would be the best to connect.
Thank you for listening to the Wall Talk podcast. This podcast is brought to you by Wall Collective. And if you've enjoyed this episode, please make sure to like and subscribe, and we'll make sure to see you next time.